We've heard in clear detail already this morning about London's prestigious growth over the last 20 years, adding a million people onto the population base, and we hear that there'll be another million added over the next 2 decades. Is this sustainable? We face a cocktail of threats that's been and factors that's been painted this morning already: economic instability, a chronic and structural undersupply of housing in the capital, social change, notably an ageing population, and transport infrastructure restrictions. This is generally recognised, I think, by central government and by the mayor as well. And there's been a series of articles and reports that have been released, and some policy changes over the last 6 months in particular. The mayor has put out a challenge to add 32,000 homes per year, which is aggressive by the standards that have been achieved over the last 2 decades. I particularly like Ben's comments about peak load, and I'd actually written tipping point down, and I think that's been mentioned already this morning. Are we at a tipping point? Are we going in the right direction? And what more can we do to meet the housing challenge that the capital faces? We have, as ever, an eminent and extremely experienced panel on my left-hand side. David Luntz, who's Executive Director of Housing and Regeneration at the GLA. Mark Clare, on the end there, who's Group Chief Executive of Barratt Developments, and Stephen Howlett, who's Chief Executive of Peabody, nicely encapsulating the affordable housing, private development and government sectors. So we expect a fair fight. Can I just ask if we can get the slide up with the questions, please? Just to remind us. The first question I'd like, as a bit of an icebreaker there, is a repeat of the question that was on the table earlier on today. And I know that 2 of the panel haven't actually sort of seen that yet, so we'll move through. The question really is, in your view, and Stephen, I'm going to come to you first. In your view, what do you believe is the single biggest change needed to support housing delivery in London?
Thank you very much. I'm afraid I've got a really bad voice today, but it's much improved from what it was first thing. I think one of the things I'd like to say, can I just kick off by saying you said that we're the mixture of the sectors. I think the thing that would surprise people is that actually Peabody and other housing associations are working right across the board. Our belief is that while our key social purpose as a charity is the provision of housing for people on low incomes, we can actually achieve that by providing a wide range of housing, from housing for sale, low-cost home ownership, intermediate housing, but also market rent. And it would surprise you that probably that 10% of our homes are either intermediate rented or market rent. And I particularly see the opportunity ahead for us to provide more market rented housing, because it gives us some cards. The system we're working on now with much less public money, and I'd love the answer to the question to say shed loads of public money coming into affordable housing, but yeah, I think that's probably unrealistic. Actually, my view is that it's not subsidy from government, it's investment. Actually, I think we've got to ban the subsidy word. We're talking about public investment. And one of the reasons why Peabody is in a very strong position now, and I can tell you we are in a strong position, we've got a £200 million bond to spend. We have further borrowing capacity of £2 billion and in excess of that. And that's because we've held on to housing for a very long time. The rent's rolled in and we still own it. So actually, if we can provide market rented housing and keep that rent coming in, I think that it provides real opportunities into the future, and is, in a sense, somebody's used the phrase patient capital, and that's what it is. So I think it's a mixture of answers. Somebody said there's no silver bullet, so I think I would like to see subsidy. I think it's very damaging that personal subsidies are being hit. We've heard about the drift of people out of central London to outer London and sadly beyond. That is really going to create difficulties, not just in our sector, but actually I was at a meeting of the Residential Landlords Association, where I think the average holding is 13 homes. A lot of their people are thinking of getting out of any provision for people on lower income. So it's not just a social housing aspect, it's a private rented aspect that benefits are a problem. So I actually have to say that in the answer to your question, it is a mixture of issues. It is subsidy, I believe, and investment. It is the benefit system. I think it is land, but it is also organisations like ours, and we're not alone in this, that a number of associations are now looking at using their strength and their long experience. We're now 150 years old. We can be an attractive proposition for investors into the longer term. You know, we've got records that show rent comes in depressions, 30s and after the war, all those things. So I think there's a whole raft of things that we can do, and I don't think there's one single answer, but I do think land availability and cash is a key issue. Somebody mentioned mortgages earlier. Actually, that is a real problem for everybody in the economy. So there's a range of issues, no single one, I'm afraid.
I think we'll probably come back to debt a bit later. David, we've shied away from shed loads of public money. So your thoughts and views on the changes required to meet the housing challenge?
Well, I think Stephen's kind of already made the point that many changes are required because many challenges exist. It's interesting actually that by far the largest proportion of people in responding to your questions think that actually the public sector does need to continue to spend and invest alongside the private sector. In fact, that rather suggests that if we don't, we're going to continue to have, or we will have a growing problem. I think I'd answer the question like this. There is a lot of evidence that, when you just look at the numbers, actually housing supply numbers have kept up very well in London. You know, we're in the last year, I think we've built almost as many homes as the London Plan target suggests we should. It's an extraordinary achievement, actually. That's because the affordable sector's been very buoyant, because we're now seeing the completions of the very large sums of money that were made available in the backwash from the crash in 2008. That's not going to last, of course, but that's what we're seeing. And the private sector, of course, has delivered, I think, probably far more than people would have assumed 4 or 5 years ago. But that is a market which is heavily distorted, if that's the right word, by high net worth investors. So someone, I think it might have been Deloitte or DTZ, I can't remember, summed up the state of the London housing market as buoyant but dysfunctional. And I think that's a very good, very kind of sharp description. What do I think we need to address going forward? Well, certainly as far as the current mayor's concerned, he hasn't given up on public investment, and some of you may have seen that he wrote a very polite letter to the Chancellor a couple of weeks ago suggesting that he didn't need any new taxes in London, but maybe London should retain its share of residential stamp duty land tax, and the mayor could reinvest that in affordable housing for London. The mayor got a reply from the Chancellor yesterday, which didn't say yes. Neither did it quite say no. More on that later. But I think the reason I mention that is because I think these things do fit together. And Giles's introduction, I think, was spot on. You know, there is housing in this city for people on very modest incomes. About 1 in 4 households live in social rented housing. There is a lot of comfort for those. They may be declining, people in owner occupation. They're doing very well. High net worth investors are doing very well. It is that rapidly growing generation rent that is going to increasingly struggle. I think it's quite interesting at the moment how little noise that sector's actually making about the paucity of their housing choices, but I suspect that's not going to remain the case as people realise that it's incredibly difficult to put firm roots down in London because you can't guarantee that you're going to have a tenancy for more than 6 or 12 months. If rent increases continue as they are, I think the demand for some solutions for that sector are going to grow. And I think that Not exclusively, we still need to do a lot for those that are completely excluded from the housing market, but it seems to me that sector that need to get a foot into equity, that need more settled and stable lives to put roots down in London, is where increasingly I think the focus will be. And I think that's the case, probably broadly speaking, across the political spectrum. And many of you will have seen a couple of weeks ago that, as well as writing to the Chancellor for SDLT, the Mayor announced something that's rather grandly called the Mayor's New Housing Covenant for Londoners, the beginning of what may be a longer-term programme to start pumping more money into equity share housing. Because I think equity share housing and other forms of rent to buy or shared ownership type housing is likely to increasingly become a dominant factor in London going forward. It's good for house builders, it's good for housing supply, and as far as the public sector is concerned, it should be seen less as a grant that disappears and more as a long-term investment that can perhaps come back from that property over time and be reinvested in new supply. Now, I think that's going to become an increasingly important part of the market circumstances unless we're going to see an increasing clamour, which politicians are going to have to address from the sector that's currently excluded, and indeed falling supply, because I think there's far too much banked at the moment on high net worth overseas investors. It's not sustainable.
So, thank you, David. That raises some good points there, Mark. You've probably got to have some views on what changes could be made. But I think we're starting to touch on the PRS question as well, which you might like to come back on.
Yeah, I mean, I'll respond to some of the comments as well. I mean, I'm sure people will know we are one of the largest deliverers of housing in London. Last year we delivered about 1,300 at peak, about 2,000. About 30 to 40% of our output is affordable housing, so we are a big provider of that as well. Good news is our business is growing again. Clearly house builders have been hit pretty hard with the downturn, but actually London bounced back very, very quickly, as we all know, which means it's a great place to invest. And there are lots of investment opportunities coming forward, and our intent is to grab as many of those as we can. I mean, I think in terms of the key question, what are the things we need to do? I think the key thing for me is it is about land release. Getting at the land opportunities that exist. There are plenty of them in London. They all take too long to come to the market, and it is quite a struggle. That said, we have been very successful over the last few years. Continue to invest in the infrastructure. We will love a cross-rail effect. It is going to give us a real boost because any developments along that line are likely to see an uplift. We saw it with all of the investment going in for the Olympics, and in East London we have very many successful schemes. In fact, our fastest selling schemes are in East London. So where you get the transport links and the rest of the infrastructure, it really gives a massive boost for housing. Of course, if we move away from the oligarchs, then for normal people, the key thing, and this is not just about London, is can I get a mortgage to buy the property? And no matter how many different schemes government have put in place, I'm afraid the total net lending has stayed exactly the same, and therefore more houses are not being built. So I'm afraid that is going to be a continued restriction unless funding for lending works and that big injection from government works. I suspect we're going to see levels of activity pretty much staying as they are. The big opportunity, because it doesn't rely on banks and mortgage lending, for us is PRS. We would love to get involved in the private rented sector. We can't hold the asset long term because we hold land and develop houses. We don't actually keep the assets. But the good news is there will be lots of people that will be prepared to hold those assets, and we already have a very major partner who's an expert in PRS in North America working with us because we'd like to do exactly what he does in New York, actually, out in London. And I think there's some great opportunities, and I've visited what they do out there. The interesting thing about the private rented centre, of course, in Newport, where he's based, he's got 15,000 units there, is it's families. Average tenure 5 years. You walk around, pushchairs, creches, schools, supermarkets, but these people, that is, they have chosen to live in rental accommodation, and it works incredibly well. Now, it may be some time before we see that in London, but there is perhaps a vision of what the future might look like in respect of providing good quality housing for Londoners who can't get access to mortgages. I think the final thing, and it's been mentioned from me, is this idea of flexible tenures. I mean, I've always thought that you either buy a house or it's provided through a sort of social housing subsidy. Is odd, because I think actually from the consumer's point of view, they'd like many, many different choices. And I think the more that we can move away from those sort of fixed tenures, where we can get people into housing, perhaps initially with small equity, but then growing as time goes forward, I think would be very powerful. And if we had those sort of products available, I think it would appeal to both the RPs and the developers like Barratt's and Berkeley Homes. I think we would love to be able to offer those sort of solutions. I do think that the way that we're going to get more houses built in London is through partnerships. We have 3 now with L&Q. We're probably going to do more with them, and we see that as a way forward. But we also partner very much with GLA, the HCA, and that gives us a great way of getting access to these schemes. And actually, probably for the first time, we're all aligned in terms of our objectives. Everybody wants to build more homes, and therefore I think this partnership approach can unlock sites that otherwise are going to stay vacant for another 20 years.
Thank you. We might just expand on something that was listed earlier on in the other 2 sessions. Access to quality housing didn't actually appear as a choice in terms of maintaining London's status as a world city or attracting inward investment. Is that a mistake in your view? And if you do believe that access to housing is going to become an issue, how long has London got before it really starts to bite? David?
It's interesting. I missed the earlier session, so I didn't see the evidence. But certainly, I mean, Ben Page is here somewhere, but I seem to remember that, unsurprisingly, I think certainly the cost of housing has become a much bigger issue in London than it was just a few years ago. I said earlier that I think one of the things that quite surprises me, and I speak as someone with kids of the sort of age where you're desperate to get them out of the home, and it's quite difficult. So I think if kids, that's very patronising. if the 20 and 30 and increasingly 40-year-olds aren't yet complaining about the miserable housing offer London has for many of them, I think it's not going to be too long before the parents do, actually, because the misery falls back on us. So I can't see, I find it very, very difficult. If we were sat here in 10, 15, 20 years' time, I think it's very difficult to imagine that some things in housing in London are going to look different. I dare say it will still look very expensive. I dare say if we still have things called waiting lists, they'll still be far too long. All those things that are going to go with any successful city, just as you get traffic congestion and other things, those will remain. But I'd be very surprised, frankly, if there aren't a different range of housing offers available. I agree with Mark. I think it's very difficult to imagine, given the demographics, given the market drivers, given what's happening in the banking sector and all the rest of it, very difficult to imagine in 20 years' time someone or a group of people have not sat down and made a lot of money over a long period of time making market rented housing work in London. It just seems to me that those drivers are so fundamental and so long term. Of course, the thing about housing is that, some of the pressure points are dissipated because people are willing to accept poorer quality outcomes, at least temporarily. People can commute in from further distances. But ultimately, those things do reveal themselves, it seems to me, in pressure for change. And I think this dislocation at the moment, this kind of buoyant but dysfunctional market, which perhaps it's always been there, but it's become much, much more compressed and pressured in the last 3 or 4 or 5 years, is going to change things. It's quite interesting. Savills did some work recently looking at the volume, the value of overseas residential transactions in London. And I think the figures were something like up from about 1.5 billion 3 or 4 years ago to well over 5 billion in the last 12 months. I mean, exponential increases, which are really, I think, going to blow open this problem that, if you like, middle Londoners have getting a settled housing outcome.
You've just
I absolutely agree. I think the market renting sector will grow and has got to grow. I think one of the problems that we've had up to now, it's incredibly fragmented, and I mentioned that about the small landlords. But there are bigger organisations, bigger players. It's interesting to hear about one's coming over from America, but there are already a number of organisations. I can look round the room and I can see them in the room who are in long-term businesses in rented housing and actually housing associations. We've been there 150 years, and there are others that can be an attractive proposition for investors in market renting. One of the problems, I think, and you mentioned families, Mark, is actually that tenancies are very short here, and actually so a lot of the market rented accommodation is focused on single people and young couples. But actually what we need is a review, I think, of the tenancy arrangements that enables families to look on rented housing and market rented housing as a long-term proposition for them. And I think not only does it help them, but it helps the investors as well. And because one of the things that worries investors is sort of the volatility of that market uncertainty. And when we were doing our road shows for the bond market, we quite clearly saw that the fact that we were charging low rents, that there was certainty of that rent coming in for a variety of reasons, a benefit system, a support to that. The ending of housing benefit direct actually to landlords is a threat, and I think the private sector sees that as a threat, because however much we want to house people who are in work, and I have to say now that Peabody, when we are housing people, we don't just look at their housing situation, we say, what can we do to help you get a job? Because really, if you're going to be able to afford to live here, you're going to have a job. Because actually, if you're in work, a lot of the benefit restrictions that are coming don't apply. So actually having a job for at least 16 hours a week, it actually gets you over that hurdle. So I think that's what we've got to look at. And we as an organisation, not only looking at how we get somebody into jobs, but what could help them get a job. Childcare. That is a really major issue for a lot of people in London. One of the other barriers, I think, and I went to a meeting the Housing Forum and the RICS organised, and there was an expert from pension funds there who ought to be the ideal investors in market renting and housing generally. They just didn't get it. They didn't understand what we were doing, and basically there was, we'd much rather have a high return on a rubber plantation in Brazil, or a supermarket. Even I don't think there are many people from up north, but even up north we were quoted sort of Sheffield, a supermarket, a shopping complex in Sheffield was a more attractive proposition than rented housing. We've really got to shift that. Actually, a bright bit on the horizon though was Manchester Council's pension fund, and it's small, but actually that's a start. And I think there's a lot of public sector pension organisations that perhaps ought to be looking at investing in market renting. And it's interesting that the London Pension Fund Authority is chaired by the former chief executive of the GLA.
Thank you. Before we just open it up to the floor, so if you just get your thinking hats on, just a quick interplay here. Mark, what more could the public sector do for development in your view? And David, a right of response, what more could the private sector do for government? Starting with Mark first.
Yeah, I mean, I've already sort of highlighted, I think one of the most important things is it is getting at those land opportunities, and we all know, we see them, we drive past them, places where they've been derelict for some time. We've just sealed a deal with David down in Croydon. It's a hospital, it's been vacant for 20 years, and you go, well, pity we didn't do it 19 years ago. So it's really, how do we get at those things as fast as we can? And I think there's a great willingness now, between certainly David's organisation and developers to really get after those things much more quickly and bring those forward, because that's going to help.
David?
Yeah, and we can help to bring land to market quickly, and we can speed the procurement process up. So we're currently pulling together a development panel framework, which means that we can avoid the tortuous OG processes that Robin alluded to a few minutes ago. What can the private sector do for us? I mean, I've genuinely got a lot of sympathy with the private sector, because these are very tough times, and I mean there's a lot of concentration at events like this on some of the supply side constraints and planning and so forth, and I think we can help there. And another little plea, the Mayor has ask the government to actually ask the GLA to play the role of the planning inspector, assuming that we go forward with this new arrangement where you guys can say it's taking too long to get planning consent in Tower Hamlets, so can someone sort it out for us? We actually think in London the Mayor and the GLA is probably a better place to do that than the planning inspectorate. So we'll do what we can do to help. I think in terms of the private sector, and I think there is a link here with the discussion we've had around PRS. It seems to me that, you know, there's quite a lot of activity going on in London. I've already alluded to that. And quite a lot of it actually is on quite large sites. The problem at the moment is that the pace of development is not as fast as we need. And it seems to me that one of the things that we perhaps need to try and crack is, are there opportunities to accelerate the pace of build out of sites, perhaps in return for some sort of passporting of properties into rental funds? Because the build rates on most private sector sites are obviously governed by the rate of pre-sales, and the rate of pre-sales is governed by how many investors can you find, or how lively is the mortgage market. It seems to me if we're going to address this PRS point for institutions, there's perhaps a tie-up there with getting some of these big sites that are going to build out over many years, moving more quickly, but producing some product that goes into that sector.
Thank you. I'm sure there'll be a few responses to that. Can we? Are there any questions from the floor? Hand in the middle there, please.
Thank you. Mark Bagent from Royal Borough of Greenwich. Interested in the idea of putting public sector land into deals that actually produce private rented market housing. How are you going to sell that to local politicians who probably don't like market renting for lots of reasons to do with the transience of the population that comes through that sector, the way the sector is managed, the standards and so on? How are you going to convince local politicians that that's a good thing for them to support?
Perhaps Mark, you could, with your New York sort of experience,
of course,
talked about that.
I mean, I think what we are trying to do, I guess, is create a different private rented sector than the one that perhaps we have. I mean, there are obviously some players who have a large number of properties, but most of the sector is very fragmented. So what I'm talking about is very professionally managed. You know, in my case, new build properties of the same quality as we would build otherwise. We've already set up our own management company for everything we build, whether it's for private buyers, for investor buyers, and we would do it for private rented. So we will effectively manage the development forever. That's something that we've done. And so what we'd be talking about is something that is of high quality, of high standard. And if I take the Newport example, if you've got an opportunity to build many thousands of units, then actually you start to create a very, very different product, if I can call it that. But let's call it homes for people and developments that people really want to live in, and developments that are family friendly, and that's about the retail, you know, the schooling and everything else that goes with it. And there are some very, very large sites in London that we've looked at many, many times. You probably need sort of 5,000 units to make it work, but actually then you can really start to create it. What you don't want to do is create some ghettoized sort of private rental. We don't want to do that. You actually want to do something that people go, actually, that's a really good alternative, and it really starts to take off, and it really builds momentum, and then we start to see more. I mean, it would be nice to think that in 5 years' time we're building 5,000 homes a year under PRS. In fact, I suspect to get the housing numbers, we probably have to see that sort of change. The good news is it's not lender related. It's effectively institutional investor related, and if we can make it work, I am absolutely certain that we will get the institutions to invest, certainly if we get the Montague recommendations coming through.
Stephen, you've obviously got over 150 years of experience.
Yeah, I just wanted to say my view is exactly that, that actually it's reputable organisations managing that market rented housing, and it becomes a long-term proposition. I think one of my worries and why I favour us at Peabody developing more market rented housing is that when we sell, actually in reality we lose control of that, and the people who've bought it sometimes buy it to rent it out, and they are often the transient residents, and I'd look quite like us to have a relationship with the long-term resident rather than sort of an arm's length relationship with them. So I don't think it necessarily is separate. And in parts of London, we're finding we're developing a very big scheme in Clapham Junction, and that's the sales values there are enormous and great, and that will help us subsidise our low-cost housing. In the East End of London, the relationship between property values and rents is very different. So actually, market renting in those areas becomes a real proposition for us.
I think there probably is quite strong local perception for and against PRS, particularly with bigger schemes. You might have some comments. There may be some comments from the floor as well.
Yeah, I'd just say two things really. I think one is the picture is not universal across London politics and London boroughs. And again, I don't think this is a sort of Labour Tory point at all. You know, some boroughs are actually very genuinely interested in long-term PRS as an option. So I think it depends very much where you are. Second thing I'd say is that, of course, the reality is that local politicians are currently presiding over planning consents that do deliver PRS, because I think most of the private units that are built in London at the moment probably do end up being rented. It's just that, as we've said, you know, they get rented in a pretty haphazard and often rather unprofessional way. So I think if you put that argument back and say, well, actually, isn't there a better way to professionalise this, to give long-term certainty, to provide good quality accommodation for local residents and local voters, then I think the terms of the debate shift.
Yeah, the case needs to be made. Another question from the floor. Sorry, in the half right for me.
As the panel, I think most of the panel knows, we're instructed to buy at the moment for a Swedish investor 10,000 units in the UK, and that's a tough job. Well, I'd say in the UK at the moment they're focusing only on London and the South East. But it's quite clear that stock, the growth of stock for the private rented sector, is going to come out of new building. Mark, it's great that you're getting involved in that. Interesting piece, though. Quite clearly, you've confirmed you're not a long-term player, and you're looking for a relatively early exit, one assumes. Our Swedish investor is happy to hold for 10 years. We bought £150 million worth of stock this year, but it's all existing stock. You won't take development risk, although there are quite a number of institutions I'm talking to, interestingly, all from Europe, very few from North America. But as Steve knows, you know, very few again from the UK, and we'd love local authority housing associations, local authority pension funds to come in and be part of that. My point, Mark, is do you see that the house builders are in a very strong position to actually help this sector grow? Do you see other national house builders? I mean, Tony's doing it, Tony Pidgley is doing it, clearly, and I think he's got a similar strategy to you. Do you see other house builders coming in and getting involved? Because, you know, they have the expertise to build the stock. The Achilles company we're acting for in Sweden is building a brand, is building a quality product, which will roll out, hopefully, throughout the UK. And, you know, 10,000 units are a lot of units.
Yeah, I mean, I guess the institutional investors want real volume. I mean, that is a key thing, and therefore it probably is the larger manufacturers, whether they be house builders or construction companies or whatever, or general developers who are going to deliver it. My sense is that in the house building world, it will be those that have substantial capability in central London, which of course immediately narrows it down to 2, I would say, but maybe 3, possibly 4. I think the key thing for me is to get this going, is to get access to those sites. We all know, and we've done it, we will bid on a site with a PRS content, but to be honest, we'll get blown out of the water by our competitor who would bid on it as private and social, because obviously you get higher values with private sale. As I said earlier, with the Montague report, hopefully that playing field is levelled. And at that point, I think we will actually start to see these sites coming through. We will use our own equity with a partner that we already have to deliver this, because actually I'm very, very confident that we're not risking that equity, because very, very quickly we could then get institutional investors in. But I think what we've got to do is just take that first step, which is getting access to land at values or with the right structure, which may well be public sector stays in the land and stays in the investment, to actually kick it off. And if we could just get one going, then I think we'll have half a dozen and so on and so forth. And then we'll be actually creating an investable product that investors like yours would actually be able to put their money into.
Thank you. A further question from the floor? Right at the back there on the left-hand side.
Howard Dorber from Canary Wharf Group, and I don't think I'm giving anything away by saying that we're also looking at PRS very interestedly as we move into residential development. But I speak actually as a renter myself. I live in a rented house at the moment, and one of the things that I think the industry is going to have to come together and do, perhaps with help from the Mayor of London, is to create a standard lease, which is not the lease that you currently get if you buy a normal, if you rent a normal flat or a house, which says things like you can't have pets, you can't paint the walls, and you can be chucked out with a month's notice on an annual basis. And I think there is a new sort of standard of lease that we could work together to create, which gives people that 5 or 10 year certainty. And in a lot of ways, we're relearning, because a lot of the mansion blocks built in London in the late 19th century, the early 20th century, were actually done on a PRS basis. And over the last 50 years, we've got out of the habit, while in America they've kept it, and it's been the lifeblood of places like New York and Washington, where there's acres and acres of this sort of tenure. So we're really relearning an old tenure.
So lease reform. David, any initial comments?
I mean, I think it's a very powerful case, and I think the problem with Howard's solution, which is that the Mayor drafts a new standard lease, is that just as we don't yet control SDLT in London, unfortunately the Mayor doesn't control landlord and tenant legislation. But I think it's an important point, and I know it's something that Montague looked at, and I would have thought as this market begins to mature, I'm be reasonably confident that government, that obviously is the legislator of these things, may well keep an open ear. So no one's raised it yet, but we've spent a lot of time talking about PRS. It was quite interesting to see the government's response to that a couple of months ago, was it, with the announcements about guarantees and some funding for equity and a new task force and all of this. I mean, not quite clear how all that's going to work yet, but I would have thought that process is likely to give some opportunities perhaps to lobby for those sorts of changes, because I can see that they may well be necessary.
Stephen, a quick comment?
Yeah, I said when I was answered earlier that I thought that reform of tenure would be a real helpful thing. I think just on the guarantee, I think that is really interesting. The government guarantee for borrowing, and I think it's about 7.5 billion. 10 billion. Well, yeah, but some of that goes to market renting and some goes to the affordable sector. I think the great majority of it's going to the market rented sector. The issue will be, does it slow down in this period of uncertainty? And I have to say, uncertainty, there's a lot of uncertainty about in the housing world at the moment, and that is restraining things, I think. The terms of the guarantee, how that works, there was a big housing association did an issue, 250 million issuance a couple of weeks ago, which they got away at 125 basis points. So you begin to wonder if actually there's a really good deal that is on the table for the investors, whether actually the government guarantee is actually going to deliver much difference. Yeah, okay, I believe there was a question at the front, sorry, on the left hand side.
John Walker, Westminster Council again. With respect to the comment about the GLA taking over the appeal process in London, I mean, the only thing I can say about this, beware what you wish for, because you might get it. It was the private sector that wanted a sill, and as soon as you've got it, you're doing your best to get rid of it. The GLA is a political body. The planning inspectorate is not political. There's a lot of independence, and in terms of an appeal decision that's made by PINs, whether you're the developer, the local authority, or the third-party objectors, they have to accept it's a decision that's been made that's independent by the inspector. The GLA isn't in that position because it is a politically led body and they have their own policies. I think in a climate where more and more we need collaborative working together between local authorities and the developers, which I certainly think is the situation that we have in Westminster. The last thing we need is developers thinking, well, I've got so much in the bag, now let's run off to the mayor to see if we can get a bit more. It just provokes mistrust, particularly from third parties who might issue their right for a judicial review. And I think the GLA have got enough on their plate, no disrespect, than dealing with trivial applications for Mrs. Smith's rear extension because she decides she'll run off, and perhaps Colin Wilson might give her a slightly longer extension than what she can currently get or may get under the new permanent development rights. It's mistrust, it's a misled idea, and people need to think before they leap.
So plenty in that question. The lid is well and truly off the box. So we might just split it down into two, actually. Mark, you might make a comment about SIL, I think, and then David, perhaps you come back on the planning side of things.
Yeah, I mean, of course, the thing about SIL and the way it was sold is this is going to make it simpler, and we're going to get consistency and certainty. So when we go into a development, we'll know what the cost is going to be. It replaces Section 106s. OK, that all sounds fine. Unfortunately, there are some local authorities that missed the replace the 106. So we're getting both. And of course, the process of setting the SIL is putting so much uncertainty into the market, we're actually saying, ooh, we just can't get on with the development. So I think the SIL thing is a good idea. It's all about implementation, isn't it? I mean, just on the other point, I mean, obviously we have a number of developments in Westminster, and we're very pleased with the progress we're making. So I'll just declare that interest. I think the key thing here is, when would we run to the planning inspectorate or the GLA? It is when local authorities refuse everything. They use the MPPF as a way of stopping development rather than as a set of instructions in terms of how they deliver the houses that are required. So I think we're talking an extreme situation, because actually we want a relationship with the authorities that we rely on for the next 50 years building houses.
David?
Yeah, I think I won't rise to all of the debate there, but I think, just to be clear, and perhaps I wasn't clear, in which case apologies, the Mayor is not making a pitch to take over the powers of the planning inspectorate. The appeal system will remain the appeal system, and you're quite right, the appeal system should be adjudicated at an independent level. What I was referring to was the very specific suggestions that government were making as part of their late summer stimulus package that said where there was a breakdown in a planning process because there were claims and counterclaims about viability, which was stalling schemes. The government, of course, have said that they are going to look to the planning inspector to adjudicate on those matters of viability. I think our point is that if the planning inspector down in Bristol is going to do that for the whole of the country, then probably they're going to struggle if they've got London as well. And actually at the GLA, we think we do understand a few things about project viability because we deal with those things on a day-to-day basis. And it seems to the Mayor that it makes more sense to try and keep those things within the integrity of accountable London government rather than just run off to the planning inspector as the first port of call.
Well, plenty to talk about there, and I'm very wary of keeping a couple of hundred people from their lunch. So, Giles, if perhaps throw back to you.
Just before I hand back to Ben Page again, I just got one more question, David. You hinted agonisingly for me that you'd had a reply from George Osborne to Boris's question about SDLT, which was not quite a no. What more can you tell us?
Nothing.
Okay, well, we'll get you afterwards. A fascinating question, and I think SIL is going into the property lexicon at the moment. I think another awful term, double dipping, is what Mark was talking about. The idea was to get certainty, but this doubling up has really upset the property industry, and I think there's a misconception in the public sector that there's plenty of money to go around. There just isn't. The finance isn't there to make schemes viable with both Section 106 and SIL. So, just before I hand over to Ben, could we please give the panel a round of applause?